Hi, welcome to our session on business-to-business transformation with faster payments. We have a distinguished panel today representing a great cross-section of the membership at the Faster Payments Council. We have representation from a network, a financial institution, a fintech, and someone from the Federal Reserve that's very involved with the Business Payments Coalition. And then myself, Steve Wasserman. I'm a founder of VMents and independent consultant working in these organizations, Business Payments Coalition, as well as the Faster Payments Council, and I'm happy to moderate this session today. So I have a series of questions that we're going to go through with our panelists, and I'm going to start by asking them to take a moment to introduce themselves as they describe what they and their organizations are doing to help streamline B2B payments for their corporate clients. So Bhushan, maybe you'd like to start out?
Sure. Hello everyone, I am Bhushan Rangachari, founder and CEO of Finsly. At Finsly, we are helping banks to transform from their legacy mainframe COBOL-based 30-year-old systems to a modern platform to serve the new modern experiences, to serve the modern customers and compete with the fintechs and win new business. I'm very happy to be here with very great parties from different industries. Thanks so much and look forward to discussing here.
Kawe, would you like to go next?
Absolutely. So my name is Kawe. I lead global real-time payment strategy for JP Morgan. And what we're doing at JP Morgan is we're trying to give our clients as many payment options as possible to be able to meet their needs for their specific organization. We recognize that one faster payment solution isn't going to necessarily solve it all for our clients. So we're really keen on giving them optionality and choice, all delivered through a single consistent faster payments experience across the globe. So in the US, in EMEA, in APAC, and in LATAM, our presence is global in 45 countries today, and hoping to continue to expand over the coming years through that same consistent global experience.
Guy?
Thank you, Steve. I'm Guy. I'm with the Federal Reserve Bank of Minneapolis, and I have responsibility for the Federal Reserve's SIPS efficiency strategy. And the efficiency strategy is working particularly on B2B payment modernization. And currently we have two very significant efforts or initiatives in the industry that we're supporting. Both of them are BPC related initiatives. One is the establishment of an e-invoice exchange framework with the plan to go into a market pilot at the first part of 2022. And secondly, in September here, we're kicking off a new initiative to assess the feasibility of bringing or establishing a remittance exchange framework very similar to the e-invoice one to the marketplace.
And Jim.
Thanks, Steve. Good afternoon. My name is Jim Colasano, and I'm the Product Management Executive for the RTP network at the Clearinghouse. For those of you who may not be familiar with us, the Clearinghouse is a bank-owned payments company. It's been around since 1853. TCH operates 4 core payment infrastructures today: CHIPS for high-value payments, EPN for ACH payments, SVPCO for check image payments, and now the RTP network for real-time payments. The RTP network has been in continuous production now for 4 years, since processing our first transaction back on November 14th, 2017. With respect to B2B payments, the RTP network offers some unique benefits that we'll be talking about this afternoon. The first is basically the payment capability that operates 24/7 in final and irrevocable funds, which provides payment assurance for both buyers and sellers. Secondly, there's a set of non-financial messages that allow for data transport through secure bank channels accompanying these payments themselves. And finally, in 2022, we will be introducing a document service that will allow end users to retrieve payment-related documents via a secure link in the RFP and RTP messages. All of this we'll be talking about a little bit this afternoon. Steve?
Well, thank you. And as we before we get into a series of questions for the panel to round robin on, I'm just going to share with you a little bit of my vision of the end-to-end transformation that involves business payments, collision, e-invoices that could coincidentally also be used to send ISO 202 messages for requests for payment. And then the approval of those payments could then respond with an instant credit transfer back that may include or separately sends a remittance advice. So all that being automated with ERPs on both ends really gives a transformation to these organizations to leverage all the technologies that are now available, as well as take advantage of legacy formats such as EDI that they these new capabilities in the BPC that Guy will be able to talk a little bit more later are able to support as well. So let me start off with a question for Jim. That Jim, we're seeing the movement of data as well as instant payment related messages back and forth between counterparties. How is that going to change the current process of sending batch and unstructured files over insecure channels in some cases?
Thanks, Steve. Well, to start with, let's talk about some of the basics, right? Banks historically have been extremely effective at moving payment information between buyers and sellers. They've been less effective at moving data between buyers and sellers. As a result, most counterparties in transactions use other mechanisms and other approaches to pass data information for invoices, for remittances, and the like between buyers and sellers. Those typically include email, it includes file-based transfers, it includes all different other mechanisms, including paper. In a lot of instances, that's still a very prevalent way of passing information back and forth. And the main reason, even with many banking platforms today, there's no assurance that information will actually get to the party on the other side. It's been that way by design, again, because the banking networks really haven't had a mechanism by which they can easily transmit data and information back and forth. Part of the problem that creates is that, first of all, when you send information separated from the payment, the possibility for reconciliation errors occurs. Also, when you tend to send file transmissions, you tend to bulk up in order to create efficiencies and cost-effective mechanisms. You tend to bulk up transactions so that there's one payment associated with a large number of invoices. When something like that happens, if any underlying transaction is out of balance for some reason, the entire set, the entire batch needs to be reconciled. So it creates a large amount of work in many corporate back offices. With the RTP network, and actually with the ISO 20022 messaging that we're going to see adopted in the US in the coming years, you can actually send that payment-related information along with the payment itself. So you're no longer separating the payment from the invoice or the bill that goes along with it. You're able to do this in the ISO message set because you're able to put in there very rich payment information. And there are messages that are specifically designed to be able to carry those in structured fields, which makes it easier for banks to deal with on the receiving end, and also easier for them to deliver it to their customers. And this is exactly what many of our customers are looking for today as they look toward digital enablement. The digitization of this information and the ease with which you can provide it through banking channels is really going to facilitate the reconciliation. The other piece that's extremely important to remember is when you send that data along with the payment itself, it's easier to reconcile because you're not going through a batch process that needs to be reconciled after the fact. All of the information that you need goes along with the payment, so you're able to reconcile it each one payment at a time. It eliminates that bulking process, it eliminates that batching process, and because these are going through secure bank channels, it also eliminates any security problems that you might have in terms of transmitting that information via email and other unsecured channels. The other point I'd like to make is, at least in the RTP network, the ISO message set also includes other very specific messages that will allow you to have a conversation with your counterparty, so that if something is out of balance, if the invoice information you're sending along doesn't match the payment, you have the ability in real time to go back to your buyer and say to them, what is the problem with this invoice? It's out of balance. So there's instant communication that can take place through the network, along with the ability to transmit larger amounts of data along with the payment that should improve end-to-end efficiency and reduce reconciliation processes that have been a problem for corporates for a number of years. Steve?
That was great, Jim. And once I get off mute, I could say something. But did anybody else on the panel will have something else to add? I thought it was really key, the additional messages back and forth between businesses, endpoints of a transaction, to do them through secure messages on these official channels is much better than email, and certainly more structured. They can do things with it through their workflows. So, but
yeah, Jim covered that perfectly. I think what's important for everybody on the panel to make sure that they remember is RTP often gets all the hype for being instant and 24/7, and that's really exciting. It absolutely will modernize and change how we do B2B business. But for B2B in particular, it's the rich remittance that I think is extremely exciting that comes with RTP as well.
Yeah, so I think that's the reconciliations, the rich data. That is one of the biggest strength in terms of the faster payment, real time, and Fedwire ISO 222 messages. But I would like to add, some use cases where it's going to be a really big impact. So today, if you look at the businesses, every business has their own ERP systems, right? So today, the invoice process and the way that you pay the bills is like, you have your own unique processes built in each and every enterprises. So you collect the bills and you have an approval process. At the end, you say, this are the payments I want to make. And all that, you generate a file, it goes to the bank, and then banks takes it from there. And then you get a confirmation back. So there is a lot of, fragmented pieces all working in different paces, and which leads to a lot of errors, right? So with respect to the new real-time RTP and FedNow payment rails, what's going to happen is you can send the request for pay through the electronic channel, and a business can receive that electronically, irrespective of whatever ERP system you use. All these ERP systems have a common language to connect to and speak to each other, right? So that is going to be the big change when it comes to this transformation. And once they're able to connect to that one, as Jim said, I can exchange messages. I can say, I can reject that invoice. I can say, why I see this discrepancy. So now what you're doing is you are bringing all of these players in one common platform, in one message standard, and whatever ERP system I use, it's going to change the way, we do commerce, because I totally eliminate all the reconciliation challenges I deal with. And another benefit I see, with respect to this faster payment rail is that, for example, with respect to the insurance claims, right? It's kind of a little bit goes towards the consumer side also. But if you look at the insurance claims today, you go and file an insurance claim, and someone, comes from the insurance agent comes and appraises the claim, and then he approves it. Today, it takes about 2 to 4 weeks to get that money back. With respect to the real-time payments, once the appraiser approves that payment, it goes to the insurance company, and there is a workflow, automatically makes an API call to the bank, and real-time payments, I get paid within an hour or so, right? That is transformational. So in the world where we are living, where Uber drivers get paid same day, right? They drive, at the end of the day, they get paid. So people are used to getting paid same day. So they want all these payments to be happening real time, same day. So we are looking for a very transformational payment experience as we move forward with RTP and FedNow payment rails.
So I'd just like to add one thing. Jim made a great point about just how well the financial institutions pass payment information. And that's because they got together and they defined very strict rules and very strict standards to follow in sending the payment message information. And they're able to contain it within that financial institution infrastructure or ecosystem. But once you get out into the corporate environment, where now you have maybe thousands, possibly even tens of thousands of systems that are out there, all of them have their different workflows. All of them have certain hurdles in getting information out to different parties. And as they try to exchange with each other, you have a many to many, and not just 10 to 15, it's thousands to thousands type mapping type exercises that you have out there. Now ISO 20022 in the ideal state provides that common messaging, but in reality, each of the different systems out there have some slight differences. And first of all, I need to make it really clear that I do not work for the FedNow product team, nor do I have hardly any contact with them at all on a weekly, monthly basis. I focus much more in helping the industry catalyze solutions to the broader industry issues out there. And I think the biggest issue out there in the modernization of B2B payments is that distribution, that delivery of this rich information accompanying the payments in such a way that these systems can consume it automatically. As Jim mentioned, and all of us, I think, would agree that anytime you can send that information with the payment, you want to do that. But not everybody's going to have that capability. And if you don't have that capability, or if you have other obstacles around that, that's where you may need to send it outside the payment system. And I'll give you an example of that. Let's say the ACH system today. For about 25 years, we've been trying to encourage the industry to send the remittance information through the ACH system, but we really haven't gotten there. And recent market research has suggested that there's very low confidence that that is going to be something that's going to be solved anytime soon. So what are some alternative ways of doing that? And I think that in the instant payment market segment, you're going to run into a situation where there is a large number of payment use cases where it's going to be great. You're going to be able to send everything through those instant payment rails. But there's going to be a lot of use cases, the more complex industry segments and whatnot, where there's going to be need for some alternative rails to complement that whole process. And one last thing on the ISO 20022, there's a popular misconception out there that ISO 20022 solves delivery. It does not. Jim will tell you probably the extent of the efforts they put in to help solve the delivery aspect of it. ISO 20022 really just provides that messaging platform for some level of commonality. It doesn't address delivery of it.
Well, that leads us right into a question that you can maybe follow on to what you just discussed, Guy. So with so many historic attempts to automate e-invoice activities and other supply chain transactions, how will this all come together in this e-delivery exchange network? And also, how can we leverage past efforts such as EDI, as well as position this for future interoperability?
I think the most important point is that there is not a single silver bullet solution, right? We have to recognize the optionality that's needed that Kawhi mentioned earlier. And probably the worst thing somebody could do is come out and say, hey, we've got a new solution. Everybody needs to adapt to that new solution, right? Maybe in 2050, we'd still be there, trying to get, maybe 10 or 15% of the way there. The thing that we need to do as an industry is work together, collaborate, recognize that there are going to be different channels for, let's say, fit for purpose delivery of different things. And we need to build off all the good solutions that are out there. So, if you were to go to the last slide that we have in the deck that the speakers have access to here, that will show you just the extent of the different players that are involved. Ooh, that doesn't look like the right one. Try to go slide 11, please. In this slide, it illustrates just the number of players. If you start from the supplier onboarding and management all the way to the right-hand side, the reconciliation, analysis, and cash application, look in the sections 4 and 5, or columns 4 and 5 there. These are all the different players that are involved just in the delivery of the remittance information we're talking about. Then you go to the invoicing, which is into kind of between the 3 and the 4. Those are different platforms that are supporting invoicing. Now we could try to say to all of them, well, we don't need your solutions anymore. We're doing something new. But again, the likelihood of success for that is low. Why not leverage what they've done? They've built these networks and a certain level of reach that's out there. Let's try to create a utility that facilitates them to expand the reach dramatically. And I think that's the important thing on that. And if you're then to go to the, there's an exchange framework diagram, I think it's slide 9. In here, this is I'll call it a big picture overview of what would be an ideal state of how the exchange frameworks would complement and support what you're not able to achieve within instant payments. So everything that Jim is talking about, sending everything through the payment, it reaches the middle part of the screen. I mean, in the ideal world, everything would go through that. And we're rooting for as much as possible going through that payment, whether it's FedNow or RTP or whatever system it is out there, ACH even. But recognizing that's not always going to be the case, if we basically create an exchange framework where these parties that are already successful, already the stakeholders helping deliver, whether it's an invoice or remittance information, have them develop basically a set of standards for them to exchange with each other, one set of standards. In invoicing, there's over 40 standards out there at a minimum. With remittance, there's a number of standards out there, but there just isn't a good way to deliver them in a way that the target corporate can consume them effectively. And I'm not sure that all the banks want to take on the integration efforts that are required to get it so that they can consume it and automatically process it. So, you know, it's a long-winded way of saying what we need to do is encourage all the stakeholders that are involved, whether it's in invoicing or in remittance, to get onto an exchange framework and start facilitating that exchange and that reach, and facilitate the automation for when this information is not able to go within the payment itself.
So before I turn this back to the rest of the panel, actually I've been involved in an X9 ISO 202 market practice forum focused on remittance advice, and that'll have a paper coming out over the next couple of months that specifically talks about how we can either have the remittance advice within the payment or separated from the payment and how they link to each other, but also covers how to standardize the ISO messages have 350 data elements, and how they get used. We don't want to fall into the trap of some of the things that happened with EDI in the past, that everybody used the standard in different ways. And so there's some best practices that can help align to accommodate anything from simple invoice payment to lots of payments with discounts and adjustments and credits and so forth. And sometimes those are too voluminous to fit through together with the payment, and may lend themselves more to remittance advice being sent separately. But let me open this question up to the rest of the panel before we move on to other questions we'd like to cover today.
So Steve, if I can jump in there for a second. I want to kind of reinforce one of the points that that guy made, that there are different solutions out there that should be working in concert and be very complementary of each other. There should not be a one-size-fits-all solution, and some are going to require complex, detailed remittance data. Some of them are going to require more simplistic data elements. Some are going to lend themselves to a network like the RTP network. Some are going to lend themselves to the e-invoice framework that we're talking about here. But technology is providing a lot of different alternatives to solve the problems that have historically been in the marketplace. And all of these are viable, but it depends on what problem you're trying to solve. Within our network, we've got not only the ability to move data back and forth, we don't want, and nor do the banks want, extended detail going through the payment network, right? So you should have enough information to be able to apply that payment to your system. But to be able to use every one of the 190 data elements that Steve was talking about a few moments ago, everyone's not going to need that. So you need to understand your industry, the problem you're trying to solve, and figure out what the best approach is to deal with that. For some corporations, RFP, request for payment, is going to be a good solution to it. We're also introducing next year a document service that would allow, through the RTP message or any other payment message, the ability to access an invoice or a remittance detail through a secure link to a data repository. And in some instances, that might be sufficient, again, depending on the problem you're trying to solve in the industry that you're dealing with. For others, more extended detail with all of the level of detail that Steve spoke about is absolutely mandatory. But again, what we're finding now is that one size does not fit all, and that we should be looking at these as complementary services that should be able to interact and interoperate with each other.
One thing I'll add for the corporates on the phone who, saw that last diagram and maybe saw all the different layers that go into processing the remittance of a payment, it's maybe a little daunting for you to say, okay, well, how do I incorporate something like faster payments into this really complicated stack? And the way I would be thinking about it if I was corporate was, don't think about this as a new train on old train tracks, right? Think about this as a new train on new train tracks, right? Let's focus on the new use cases and the new experiences that we can create together to kind of lead the market. Think about on the business to consumer side where cashing out through the gig economy has been really revolutionary for RTP payments, right? Same thing with earned wage access and being able to access your payroll ahead of time. These are new experiences that didn't exist before. They will lead the market on the B2B side as well. Experiences like providing a payment on the delivery of goods or services, right? Experiences that didn't really exist before. And then all of the retroactive old train tracks will adapt as well once they start seeing the benefits that these new experiences can deliver.
Kawhi, I couldn't agree more. I think that was very well articulated. There's so many new opportunities that the instant and real-time payment rails are going to be providing, and this time next year, there's probably going to be 50, maybe 100 more use cases we hadn't thought of. We're sitting all day trying to think of new ones. We don't think about them, and then they just pop up all over the place. It's been an interesting learning curve.
Yeah. So the beauty here, one thing is we all need to agree this is a new train, new rail, right? The thing is, adoption is going to be the key. Earlier, if you look at it, payments was happening through the banks, and the remittance information was exchanged outside of this banking system. It's all net system to system, or it was happening in the private networks. Now with RTP and FedNow, now there is a shift in that model. Remittance information can also be exchanged through these financial institutions. Now, the enterprises and corporates need to adopt that one. So it's a totally new way they can exchange this information. So what I see here is these corporates is going to listen to these invoices coming from this banking system, and they have to create a new way they deal with it. And it's going to be again transformational, and adoption is going to be the key for the success.
Okay, well, this has been a great conversation. I'm going to give Kawhi a chance to talk about JP Morgan having recently announced their request for payment in the US. Can you explain how that process actually works and how we can apply it to B2B invoices? And, what kind of time frame we're looking at?
Yeah, absolutely. So I think if you flip to slide 7 here, we have good screenshots that can kind of show what that experience is. And a little bit of the new train tracks that I had talked about earlier, which is a cool use case that I think we could see in the foreseeable future. But essentially with request for payment, it enables all of the benefits that you would get with an RTP transaction and more in the opposite direction. So RTP, as we mentioned, is 24/7. It's irrevocable, it's instant, and irrevocable and instant don't work very well with debiting someone's account, right? It's a ripe process for fraud, for disputes, for complaints. It's not really the experience that you want to do. But with request for payment, you can send a non-financial message over to the institution where that person banks. They can present that request to the recipient, and the recipient can choose to instantly approve those payments and send that payment via RTP to your organization. But at a high level, that's the way the experience works. And what it does is it really enables a broad new suite of use cases. And the example that I have here is the delivery of a car or multiple cars to a dealership that you need to be able to collect payments for once the goods have been delivered, right? And you can build that right into the app or into the experience that your organization looks to leverage. And once the person has gone through and confirmed that they want to make that payment, the message is sent over to their financial institution. And on the following slide, on slide 8, we have some of the screenshots of what that experience would look like in something like the Chase app. So they would receive a notification, they would receive an email, a text, an in-app pop-up notification. They would authenticate and they would see that bill or that invoice directly in their Chase app to be able to approve it and send those funds instantly to you. And you'll receive confirmation when those funds have actually settled into your account. So that's kind of how the experience works. And it's all of those new experiences that it can deliver that's most exciting in the B2B space, like the payment of delivery for goods and services. You also asked about timeline. So as the announcement, as you highlighted the announcement, we launched in the US about 2-3 weeks ago. So maybe mid-August at this point. And we've have some successful pilots to date with some exciting clients that we'll hopefully be announcing soon. I think the broader industry is moving towards a Q1 2021 timeframe to have the large financial institutions all communicating with this request for payment technology. And that's when I think we'll start seeing a critical mass that clients can really start leveraging and adopting. And clients are really excited to start today and start working with one financial institution and get the benefit of 40-45% coverage that you'll get in Q1 2021, which is really exciting.
That is exciting, and thank you, Kawe. And this was an interesting use case that actually started with self-initiated request for payment effectively, and then ended with the approval of that payment, going to the to pay for it. So that was very good. I'm going to move along a little bit to the next question, as we have 10 minutes left before we go to live Q&A. So this next one is for Bhushan. We've been trying to have a one-size-fits-all solution for everybody, and we talked about that a little bit already. But we expect larger corporates will use APIs, and smaller ones want more of this an experience. How can we tailor the request for payment experience that's good for small businesses as well as work for larger organizations? And how can we address these needs for SMBs at the same time be scalable for corporates?
That's a great question, Steve. So if you look at the new banking infrastructure that is coming up, right? So we are connected with RTP and we are also FedNow pilot participant. So what this is going to enable is, it's going to enable the exchange of this request for payments and also enable the remittance. So what we anticipate, what we see here is that small medium businesses, they are not looking to do any programming on their end. It's a small businesses, right? They want to do their business. And they don't want to deal with all these, ISO 222 messages and 350 fields. They just want a very simple information. I want to send an invoice and I want to make a payment. When I don't have a payment to make, when I don't have enough cash flow to make a payment, help me with the finances to make that payment. That's all they are looking for from the financial institutions. So what banks should be, financial institutions and credit unions, they should be doing is to connect to RTP and FedNow payment networks, because both are RTP is already operational and FedNow is going to be operational starting from January 2023. And financial institutions should provide that ability for small medium businesses to send invoices, to receive invoices, to make payments, and look at how their cash flow is looking like, and help the small businesses with the cash flow need. At the same time, does that satisfy the need of the corporates and enterprises? Absolutely not. They are looking for more comprehensive data exchange, the informations, ISO 222 messages. So in that case, what we anticipate is what we have to do from the financial institution side is that we need to provide an API for the corporates to come in to make a request for pay, to make a payment. And also we need to have an API out to the corporates so that we can notify them, hey, here is an invoice for you. Here is a payment that you received, so that it's a two-way reconciliation that's happening between the corporates and the financial institutions. So one way it's an API, the other way we call it webhooks. So these are the technologies that is going to enable efficient exchange of these informations. The question is how fast a financial institution can adopt, right? So today, if you look at 10, 15 years ago, if you want to have a new server, it used to take 6 months. I worked at Wells Fargo. Now we had to wait for 6 months to get a new server available to do anything. So today, with the technology advancement, you can do that within few seconds. You go to AWS, you launch a server, it is available. When it comes to the financial institutions, if we go to slide number 12, the current infrastructure at the bank is this complex. Right now, you are running an ACH network in one system, wires in a different system, SWIFT in a different one, RTP in one provider, FedNow different providers. Now the customer is looking for a simplified payment experience. Hey, all I want to do is I want to send a payment. Here is the beneficiary, how fast I want it. Just like a FedEx. You go to FedEx, you want to send a package. They don't ask you whether you want to send it by flight or by train or by horseback, right? They just ask you, okay, tell me the destination and here's the fee. But when it comes to the financial institutions today, we send them to different channels because of the limitations we have in our own banking infrastructure. So at Finsley, we are using this cloud technology to make it more faster. We are helping to banks to adopt RTP FedNow in a matter of 2 to 3 months. We can have a new infrastructure ready within a day. So that's the power of the cloud. So if you go to the next slide, slide 13, we are basically simplifying the entire infrastructure. Instead of having a spaghetti architecture in the previous slide where you see every system connected to different core platforms, here you have one payment hub that is connecting to just once. So this lets you to focus more on innovation. You don't have to spend your time on just maintaining and upkeeping of the system. So basically you are just focused on launching this platform and don't worry about upgrades and maintenance, just focus on business. So the APIs, a simplified experience for small businesses, and webhooks is the only way that we can serve the multiple market segments.
So I'd like to open this up, but I'm going to also try to expedite fitting in another question here. But I'm going to ask a question first that we'll spend a minute on. Is a lot of businesses have very diverse and complex payment approval processes, and so how would that work with business transactions that have instant credit transfers and requests for payments?
I think so. I will take it up. So let's say I'm a small business. Okay, I went to one of the large bank, and I have my account with one of the three largest bank. I really don't have an approval process today. That's a shame on the ability for the banks to offer such capabilities to small businesses. Because I'm a small business, but I still want to have that secure ability to approve. So what we need to happen is, small, medium business should have that approval process. They should have that, user experience to do that. And also with the APIs, these corporates should be able to make that approval. They should initiate that payment only after it is approved. So it's not a one-size-fits-all solution. With small, medium businesses, financial institutions should have that control, that approval process. With the corporates provide that approval and make an API call into the bank.
Yeah, Steve, I don't see this as being all that much different than the way corporates handle the wires today. The real-time experience occurs once the payment has been approved. And there can be as many approval steps at the company as the company feels necessary. And in point of fact, we would encourage businesses to make sure that they've got good internal controls before they release a real-time payment, because these are final and irrevocable. So we actually do encourage businesses to make sure that they've got those internal controls. We would encourage them to make sure that they're following good protocols for workflow management and approvals. And then once you release the payment, it will happen instantaneously, and you will get that response that says that the payment's been made. But we expect that that will, within the parameters of the new experiences that Kawe and Bhushan have been talking about, hopefully it'll be a much more delightful approval process. But that approval process and that workflow we expect would still be in place.
Yeah, it's very much a spectrum, right? When you think about it, you have the consumers on the left-hand side of the spectrum, you have enterprise all the way on the right. And as you start moving up through that, it gets increasingly more customizable, so to speak, right? So for the consumers and small businesses, they're likely using their online banking portal to receive and approve and go through these bill payments. And I think that experience is already really well established with the current RFP process. As you move towards middle market, what's really happening is it's industry-specific software and value-add services that need to encompass all of those payment options in a pretty little bow, just like Bhushan highlighted. And then as you move on to the enterprise side, that's when they require the bespoke customization that really only webhooks and APIs can offer, right? It's pushing a webhook to the client to say, hey, you have a request for payment over here. Are you going to approve it? And then they can approve it via API in their custom, enterprise software that'll allow that payment to go out the door. So it really is a spectrum on how we service, and every client is going to fall somewhere along that spectrum. We just need to make sure that we can account for all.
Okay.
Just to add on to that, this goes back to the very first question I think you asked Jim, and that's this transition from a batch environment to more of a real-time interaction or messaging. And that's a big change for the corporate side of things. Their systems weren't designed for that either. And so we're getting to the point where you have RTP, FedNow, these other systems, the wire systems already out there that can deal with this real time, but those corporate systems can't. And there's going to be evolution period there for, ideally, who knows how long it'll take. They don't tend to change very rapidly. Companies don't say, well, next year, let's change our accounting and treasury management system, right? They usually only change it when they absolutely have to. So we're probably talking 5, 10, or 15 years before there's a lot of these have integrated a lot of these capabilities into it. So there's going to be a lot of intermediary solutions like Bhushan has talked about, some of the things that you're developing at JP Morgan, obviously a lot of stuff that the TCH and FedNow groups are working on, but that's really going to be key. We want to get to that point where it's basically as transparent as sending emails today, right? It's built into their systems. They don't even think about it. They just say, hey, I want to pay so-and-so, there it goes. And it has the remittance information and that invoice, however it was received, which is one of the challenges today. How do you know where to send an invoice in such a way they can automatically payment? Even an RFP, how do you know where to send it, where corporate can automatically ingest it and process it through their workflow? That's what the industry needs to work through over the the next 5 and 10 years. And let me just clarify, to build to bring along some of the legacy things. So there's all the new things that Kawe mentioned earlier. Focus on those and all those new experiences, and these older ones, all these accounting packages, ERP systems, they'll start to see the light and they'll start integrating all the changes and enhancements.
Well, this has been a great discussion. We've run out of time for our panel part of this, and we're going to be moving on to our live Q&A momentarily. And we had at least a question or so that we didn't get to here that if we don't have any others to address, we can answer then. But thank you all. This is a great session, and we'll see you on the other side. Thanks.
Thank you.